Hi everyone, my name is Solomon Kimani, a real estate analyst at Cytonn Investments. And on our focus of the week this week, we are focusing on development financing in real estate. And the report was covering the introduction part of it. And this is a special type of financing that is accorded to real estate developers to acquire land, develop it, and maybe build a property or refurbish an existing one. This is a special type of financing which is given for a period of 6 to 36 months, that is half a year to 3 years, and it's used specifically for development of the real estate properties. Generally, what we covered in this report this week, we are covering on some of the sources of development financing, which include but not limited to, first, the commercial banks. Commercial banks of Kenya give developers loans that they pay after a certain period or after the project is completed, and the developers pay after selling their properties or through arranged repayment schedules, like for example mortgages, where you agree with your bank, I'll be paying X amount of money every month until I complete my loan. Then the other type of financing is the mortgages, where you get a mortgage from a bank or from an institution like KMRC. KMRC offers mortgages to first-time homeowners, and it's one of those available options if you want to finance your development in Kenya. Then we have the capital markets, where we have initiatives like REITs, Real Estate Investment Trusts, where a fund is put together and the developer uses the fund to develop their property and sell and give rental yield or give returns to the investors. Then we have others like construction loans, which are can be given by private institutions, can be given by banks, and can also be given by the government initiatives. And that's just to mention a few. So after now understanding the sources of financing in real estate, the next thing we'll have now, we checked on the models that are available for developers to follow. And the first one is use of pre-sales, where you sell your units before you even construct them and use the proceeds from these sales to do your development. So another model, financing model that is available for developers, is use of JV partnership, where you partner with a land owner. They bring in land, and then the developer bring in cash. They develop the property and they sell. They can discuss to either repay back the land owner using cash or using some of the properties they will develop, like units. And that's a model that is gaining traction in Kenya. It's a model that many developers are using currently to develop. Then the others include now the debt that is available with the banks, that they will be advancing a certain amount of money through their disbursements to support this construction. Then the others include the REITs model and the hybrid, where you combine both equity and debt. On the last section of the report, we covered on the challenges and opportunities that are affecting the development financing. And one of them is high cost of capital, where you find the construction loans are being given at very high interest rates of up to 16%. And this one is making it a burden to developers to look for these capital. Then the other one is we have underdeveloped capital markets, where majorly the development capital comes from either debt or from developers' contribution, but the capital markets are really slow because we do not have that general knowledge about how the capital markets work. For instance, the rates in Kenya are really low. People are not taking it as much as they're taking the bank loans. So we find this a challenge, and developing the capital markets would ease this burden of development financing to developers. Then Some of the opportunities that are available currently for real estate developing is coming up with a hybrid model of how to finance developments using both capital, using equity, and using the capital markets to ensure that the construction industry, the development of real estate continues without having that much constraint on financing. For more information on development financing in real estate in Kenya, you can visit our website, that is cytonnreports.com, where you can get the entire report and you can get to understand how financing in real estate is working and the various opportunities that are available for you as an investor and as a developer. Thank you.